Don't buy there, crime is out of control. We've all heard someone say it before. We've had comments right here on our YouTube channel saying just this. But does crime really affect a property's investment potential? Well, no one here in Australia has done this. So we have crunched over 90,000 raw data points, spent over 100 hours and thousands of dollars to be able to tell you today in this video for free if higher crime means less profits. Now, this video is a monster. We will walk you through the data and the process our team went through to answer two questions. Does the growth of crime affect capital growth or rental price growth? And is there even a relationship between the crime rate and the capital growth rate or rental growth rate? This isn't just another video telling you which suburbs have the highest crime. It's something you've never seen. By the end of this video, you'll have the knowledge that could save you or make you possibly hundreds of thousands of dollars. Now, this has taken weeks of work, weeks. Just researching, sourcing, accessing and filtering the raw data sets alone was a mission. Then we had to visualize the data, and that's all before we could even begin to analyze it and write this up. Firstly, Queensland is our turf. It's our home and our backyard, so it makes sense that we analyse here, where we specialise. We accessed the Queensland Police Service's raw data sets, which had the past 18 years of reported crime offences for Queensland. We filtered this data to focus on 9 Queensland local government areas that would provide the most accurate sample size and outcome credible of this research topic. The regions that you see on screen are the ones that we used the data to analyse. This Queensland crime data was broken down year by year, month by month, crime by crime. Yes, that's right. Individual crime occurrences were segmented down into 89 different categories, such as violent crimes, robberies, drug offences, etc. It's a massive data set that nearly sent our team members, even those with master's degrees, crazy. Just look at it. We then omitted all the traffic and related offences, so the crime rates we calculated are as accurate as possible and aren't skewed by the number of speeding tickets that were issued. Sam, our data man, then aggregated and visualised this data into graphs, which provided us the crime rate of each individual LGA for every year between 2014 up to August 2024. But we didn't stop there. We also calculated by what percent crime grew or declined year to year for each individual LGA throughout the 10 years between 2014 and 2024 and the 5 years between 2019 and 2024. This figure is called a yearly crime growth rate and is shown as a percentage. Now we had all the crime data we needed to perform this analysis. Tick. We then accessed 2 more primary data sets that provided the past 15 years of house price growth and rental price growth data in each of the 9 subject LGAs. Using this historical property data, we calculated the average capital growth rate and the average rental growth rate for each of the 9 subject LGAs over the same 10-year and 5-year periods, just as we did with the Queensland police crime data. We also did this over a 14-year period, and I'll explain why we did that much later in the video. Now, I just gave you a relatively simple explanation on what we did here, which secretly kills me a little bit because this was a massive undertaking, a huge amount of work. The effort to ensure the data was credible, reliable, and ethical was nuts. So I have to give kudos to Sam, our data man. He went on this journey with me somewhat, and I feel for him. But with this work now done, we were able to visualise all the data for crime and growth onto graphs, allowing it to be analysed to finally answer the first bloody question. Does crime growth in a region affect its capital growth or rental price growth? The main outcome from this work so far was to get the numbers or figures which allowed us to compare, contrast and discuss the results. We wanted to clearly visualise this to answer the question of whether the growth of crime had any impact on capital growth or rental growth over a 5-year medium term or 10-year long-term time frame. It might look like a lot on screen, but don't worry, I'll explain what this all means. Let's start with analysing each region's median capital growth rate and compare this with the growth of crime to see if the crime growth rate had any effect on how each region performed. Kicking off with the 10-year trends. Sunshine Coast sits in first place with the highest median capital growth rate of 131.4%. The Sunshine Coast's crime growth increased over this period by 3.05%, which sits just under mid-place, with 3 LGAs having a higher crime growth and 4 LGAs having lower. The Gold Coast has the second highest average capital growth at 125.74%. And check this out, it has the highest crime growth at 3.42%. Actually, the Gold Coast shares the highest crime growth with Logan, which ranks in fourth place at 118.43% of capital growth. Gympie is third with 125.61% capital growth and a crime growth of 2.41%. Now, fifth and sixth place is almost a tie between Ipswich, which has 116.62% cap growth, and Moreton Bay just a shaving under at 116%. Now, what's interesting here is Ipswich has the absolute lowest crime growth, just 0.33%, but Moreton Bay has the second highest at 3.38%. Redland City and Toowoomba have lower capital growth rates and also lower crime growth rates. Now remember, I can't go through every single point here or I'll be talking for 2 hours, but as you can see, there isn't any direct indication that the growth of crime over this 10-year period has had any impact on which region has had more or less growth when compared to another. It's fairly straightforward really, but let's take a brief look at the 5-year trends. Without going into every single LGA here, I'll call out the most interesting stats. Gympie has the highest capital growth rate at 94.57%. Now, Gympie's crime rate sits right in the middle of all of the 9 LGAs at 4.3%. Toowoomba has the second lowest cap growth, yet the very lowest crime growth rate. In fact, its crime growth reduced by 2.12%. So no prizes for Toowoomba having low crime. Lastly, Moreton Bay had the highest crime growth rate, well above the other regions. It was ranked 6th in capital growth, with 5 regions achieving higher growth and 3 achieving lower. Whether we zoom in or out of the data further, the findings here support the 10-year trends and point back to crime growth having no relation to property prices. We will come back to this capital growth versus crime discussion a little bit later, so stick around because we're going to geek out a bit harder on the data. Now let's do a similar analysis, but instead comparing median rental price growth of each region versus its crime growth, again across the same 5-year and 10-year period. The Gold Coast has the highest rental price growth at 83.18%, but interestingly shares the highest crime growth at 3.42% with Logan City. But Logan City has the second lowest rental growth at 41.46%. This means the 2 LGAs that share the highest crime growth, one has the highest rental growth and the other has the second lowest rental growth during this period. So they are almost polar opposites. Gympie and Sunshine Coast showed high rental growth with moderate crime growth rates. Moreton Bay sits in the middle position with rental growth but has the second highest crime growth. The rest of the LGAs fall into 6th, 7th and 8th place, as you can see. What we see here is that there isn't any direct indication that the growth of crime had any impact on which region has had more or less rental growth when compared to another. But to close it off, let's just go over the 5-year trends. Gympie has the highest 5-year rent growth at 55.81% and is ranked around the midpoint with a 4.30 growth in crime. Gold Coast has the second highest rental growth at 55.3% and has the second highest growth in crime. Compare this with Brisbane, which has the lowest rental growth being just 39.66%, but has the third lowest crime growth rate of 1.32%. Lastly, I'll finish with calling out Moreton Bay, which has the highest growth in crime throughout the period at a whopping 9.61%. Yet, it sits smack bang in the middle of the rental price growth ranks in 5th place. So even though Moreton Bay has the highest crime growth, there are still 4 LGAs that achieved lower rental growth and 4 LGAs that have achieved higher. Again, this 5-year data supports the 10-year trends. To close off this first question, we can conclude that the growth of crime at an LGA level does not impact capital growth or rental price growth. Now let's get into the second question we want to answer. Is there even a relationship between the crime rate and capital growth rate or rental growth rate? What's the difference, you ask? Well, what we just measured was the crime growth in each LGA over a period. So by what percentage it increased or decreased. What we'll do now is compare crime rates with price and rental growth to see if there's a relationship. We will do this by calculating the number of crimes committed in these LGAs by the number of people in them to provide us with the actual rate that crime is committed. We can then test this crime rate against the capital growth rate and rental growth rate to determine the strength of the correlation between them. To test this, we have created two more graphs that combine the 9 separate LGA crime rates to produce an average or median, as you can see on screen, represented as the blue line. We also combined the 9 LGA's house price growth data, and this is the dotted black line. We did this again on a second graph, but combined the rental price growth data. Now, this part gets a little nerdy, but stay with me. Each graph provides us with what is called a correlation coefficient. Correlation coefficients measure the strength of the relationship between the two variables, or simply put, in this case, it will tell us if there's a relationship between crime rates and capital or rental growth. We used the Pearson correlation coefficient method. A value of 1 means there's a perfect positive relationship. This means that as one thing increases, the other also increases in a perfectly predictable way. A value of -1 means there's a perfect negative relationship. So as one thing increases, the other decreases in a perfectly predictable way. A value of 0 means there's no relationship at all. The two things don't seem to affect each other. So by calculating this number, we can see whether changes in crime rates are related to changes in property prices or rental prices. If the number is close to 1, or -1, there's a strong relationship. If it's close to 0, there's little to no relationship at all. I'll show you what this simply means in our graphs. We have used 15 years of data here on these graphs. As you can see, from 2020 onwards, the median house price growth skyrockets because this is when Australia's once-in-a-lifetime property market boom occurred. This skewed the correlation results, which made them unreliable. So we instead retested using 10 years of data from 2010 to 2020 to be more accurate. As you can see, the average crime rate was relatively stable over the years, showing only minor fluctuations, ranging from 0.88% to 1.22%. So over the 10-year period, a 0.34% increase. In stark contrast to the relatively stable crime rate, the median house price shows a steep increase of 43.3% between 2010 and 2020. The correlation coefficient we calculated is 0.85612%, which indicates a strong positive relationship between the average crime rate and house price increases. Now, on paper, this would suggest that if we all went out and started partaking in criminal activity, house prices would skyrocket. And likewise, if all criminal activity was to stop, house prices would plummet. In fact, it suggests that with a 0% crime rate, house prices would be around 155% lower than they were in 2010. And I think we can all agree that's just not correct in real life circumstances. In fact, crime rates fluctuate very little over the years, making it unlikely that they have any significant influence on house price trends. And this is supported by the fact that house prices increase faster than crime rates. The major learning here is that the crime rate should not be mistaken to be the causation of house price increases. The rise in house prices has not caused the crime rates to increase, nor does a stable or increasing crime rate drive house price increases at this regional level. Now let's see if the crime rate affects house rental price growth. A similar observation can be made when comparing the median rental price increase to the average crime rate trend. Despite the relative stability of crime rates over the years, rental prices have shown a strong, consistent upward trajectory. The Pearson correlation coefficient is slightly lower in this case at 0.78579%, but still indicates a strong positive relationship between the two variables. On paper, this suggests if all crime ceased, rents would be 63% cheaper than in 2010. Which is again, very unlikely. I hope we can all agree that the data has spoken. It is unlikely that crime growth or the crime rate affects house price growth or rental price growth at a regional level. What this research also highlights is the importance of interpreting data beyond relying solely on regression models or correlation factors, and that it's critical to avoid tunnel vision when analysing data correlations if you want to uncover the full picture. So remember, while correlation factors like these ones in this second part of the video provide valuable insights into relationships between things, they shouldn't be over-interpreted or assumed to reflect causal relationships. But if crime rates don't impact growth, then what does? Well, there's a complex set of external factors and metrics that do matter. Ones that have a higher weighting that do impact growth, which we have covered and will continue to cover in our videos. Now, we spend thousands of hours per year researching across all of these factors and are very happy to explain this to you. Just pick up the phone and give us a call or jump on our website to book a discovery call. Until next time, happy property navigating.